Welcome to this week's Treasury Career Corner podcast, where I interview Treasury professionals about their Treasury careers. Each and every week I talk to treasurers about how they've built their careers, where they are now, where they see both themselves and the Treasury profession going to next. I'd like to say thank you to our sponsors, the lovely team at Flywire. For those of you who want to learn more about how Flywire simplifies cross-border receivables, which then eliminates foreign exchange risk, and in turn reduces also your days sales outstanding and your receivables, which then gets rid of those reconciliation headaches. What could be better? If you want to know more, just follow the link in our show notes. You can find out who they are, what they do, and how they make your lives as treasury professionals much, much easier. And as I say each and every week, let's get on with this week's show. This is one of our update podcasts where I catch up with one of my previous guests. I'm going to be joined by the amazing Sam Pallotta. He and I spoke way back in April 2020 when he was the treasurer of Rockefeller Group. He's now moved on. He's the CFO of Russo Development. Now, Sam is actually going to explain a little bit more about the transition from treasurer into his new role as CFO. We'll reflect on some of the things that made him successful in that CFO role, some of the things that he got from his time within Treasury, and some of the things he didn't actually have. He expands on that in the show. So what you'll get to do is listen to the original podcast. We'll then add on at the end. You'll hear a nice move on, nice and smoothly, to Sam talking about his new role. So, as I say each and every week, thanks for listening, and let's get on with this week's show.
Mike, I'm really looking forward to joining you today. I began my career, first significant job I had was with Johnson & Johnson, their corporate finance team. And I was working as a financial accountant, pulling together P&Ls and balance sheets, doing market analyses from a finance perspective. And I really enjoyed corporate finance, and Johnson & Johnson was an excellent organization. But I envisioned for my career obtaining my MBA. So I was able to get my MBA at the University of Virginia. While I was doing my career search and trying to restart my career and think about what my next step would be, I was attending a lot of symposiums and information gatherings on different careers and different opportunities. And I happened to attend a workshop that was run by General Motors that was seeking summer interns for their Treasury department. And that was just a light bulb went on when I went in and heard about that opportunity, because I never really knew what Treasury was. I was a finance person. I had majored in finance and loved corporate finance, but then sitting here in this meeting, all of a sudden I heard about Treasury, and to me it was these complex financial transactions that were key to the strategy of the organization, and it just fascinated me, and kind of the light bulb went off, and I said, I really want to pursue this further. I abandoned the other opportunities, and I just focused on getting a summer internship with General Motors, which I was fortunate enough to obtain, and it started my career in Treasury.
And then you made that move as well, didn't you? You were J&J, and you actually joined General Motors from that rotation. Explain that, because that's a great company to work within and to really have that on your resume.
Yeah, when I was at General Motors, I felt as if it was a very prestigious position. Their treasurer's office globally had almost 100 people in the office, and the transactions that they were taking on were innovative. A lot of the case studies that I learned at school were from General Motors in their treasurer's office. And, I went in for my summer internship and then ended up working there for over 5 years in a variety of rotations. And it was just a fascinating and such an exciting time for my career to start my career in Treasury there. I'll be eternally grateful for the opportunity and all the work experience I obtained, as a summer intern working on, selling the company's corporate aircraft and leasing them back. So a sell and lease back transaction for $100 million of corporate aircraft. And then first day in basically as a summer intern. And then first year working on the capital markets team, I was managing a fixed income portfolio of near-term cash. And it was normally a $500 million to $1 billion fixed income portfolio, which was interesting enough. But then, we ended up doing the largest debt issuance at that time. It was a $17-18 billion debt issuance, and being able to sit at the table as the most junior person, but be able to be a part of that deal, and then to help invest the cash in the near term as it came in to the organization and put it to work in the fixed income market temporarily. It was just a really fun challenge to take on, especially at such a young age in my career. And then I worked at General Motors for 5 years, as I mentioned, and I rotated into assignments in overseas finance, pension plan, funding and analysis, as well as capital planning. So it was a lot of opportunities to kind of learn Treasury and to be challenged every day and really get that, grounding in Treasury that I'm able to now leverage throughout my career.
And that ethos, I wanted to dive into that. We spoke about this. We had a pre-briefing call and things. And one of the things that really fascinated me was you talked about it being groundbreaking for Treasury, because Treasury can be just keeping on looking after the cash or keeping on doing the financing and things like that. What was pushing behind that? I mean, obviously, there'll be maybe some senior members you might sort of point towards, or why did they bother to be groundbreaking? Was it just, well, if we do this debt offering and we make it the biggest, it's going to get us the biggest return? Is it simply just, at the end of the day, still about the cash? Or was it just that they wanted to sort of stretch the bubble, push the bubble of Treasury? Or what was the sort of the driver behind it, would you say?
Well, General Motors at that time it's of course an automotive company, but it's also a finance organization. And it still is today, I would imagine. In that, they have the GMAC, where they were, serving as a finance organization, extending loans. But, the operations of automotive companies are very heavy into the finance. And the Treasury team was perceived to be an integral part of the success of the organization, whether, trying to forecast billions of dollars of cash or, manage a $100 billion pension plan that was really constraining the company. I mentioned earlier that debt issuance. One of the reasons for the debt issuance was to fund the pension plan. And all of these things were having, significant impact on the liquidity, profitability, and viability of the organization going forward. And so these finance projects were really instrumental to the success of the company, and as well as some of the challenges and troubles that it had over its time.
And then number of years there? You're 5 years there?
Yes, it was 5 years.
Yeah, 5 years. You did 5 years, innovative, great. Why not stay? What happened?
Yeah, I really enjoyed the time there. It was, I think almost everybody who leaves General Motors always looks back and says, that was a unique time. But for me, while I liked the work, you spent a year deeply immersed in one project area. So you'd be deeply immersed in pension plans. You'd be deeply immersed in capital markets. And I wanted to try to, at some point I wanted to kind of have a little more breadth and kind of see all of Treasury on a daily basis, as well as I wanted to have it be I wanted to have a little more impact on the company's long-term strategy. General Motors is such a large organization. It's really impossible for anybody, especially someone in a junior position like I was at the time, to truly influence the organization. Moving to the Rockefeller Group, we're a company of 200 people. We have a big name. We have a pretty strong balance sheet and a lot of revenue. But I was really able to, from day one, run the Treasury department and be directly involved in the investment strategy and the corporate strategy of the organization. And that, to me, those two things really excited me. So when I had this opportunity at Rockefeller, I said, it's the opportunity to run a whole department, build the department up from what it was, and impact the organization in such a way. It was just too good an opportunity to pass up.
And you've been there, 12, 13 years now. Lucky for you.
Yeah, it's been great. I mean, every couple of years, new challenges come in, and it's just made it a very fascinating career for me. So I continue to enjoy my time here.
We'll talk about it because let's go back to the early days. And again, when we spoke before, you were coming in and you're relatively young, whippersnapper, coming in from, hey, look at this big dude coming in from General Motors, look at him, and then you're working alongside leading people older than you. And you're having to influence and lead them, and you're their boss. And that was one of the things we identified before the show, that you really thrived in that, and how you took that challenge on. Can you explain for the listeners again? They'll be the same thing. They're going to a new place. They go, right, you're going to manage a team of 3, 4, 5, and the size of the team, but they're going to be 10, 15, 20 years older than you. Good luck. How was it?
Yeah, we can talk about that, absolutely, because building the department up and improving our cash forecasting or our bank relationships, to me, that was the easier thing, and ironically perhaps, because what the challenge for me was in terms of being a leader and developing my team. Because one, I hadn't had much experience in that, but I'd been with my career. You're right, I was young, I was 33. I had about 10, 11 years of experience and not very much experience leading teams. Then, as you mentioned, all of my team members had been with the company. They were about 10 years older and been with the company a lot longer, on average maybe 15, 20 years. And so there was this challenge, and it became a situation where, how do you, first of all, establish your credibility? And then how do you build a rapport with the team? And, establishing the credibility was around, driving change, leveraging my experiences at GM. That was good. That was helpful, and it was easier because I was able to, leverage my acumen in Treasury. And so I think both my team as well as the senior management team up above recognized that I could have value to the company early. But then building the rapport with the team was even more challenging because, there was the age difference. There was this concept of, I should be, respecting my elders. I should be deferring to their tenure, but at the same time, you're the leader. You have to drive the company's vision and mission. And in some ways, there were hard feelings. You're replacing people that maybe wanted the job opportunity themselves, that wanted the position. So it was a very unique time where each individual had to be addressed and dealt with, and they were all very unique. I only had a team of 3 at this time, but each one represented a unique challenge. And the way that I found the success that I was able to have was really just by kind of listening, really trying to get to know what drove each member of my team, and especially because they all had such unique approaches to their positions and unique desires for what they wanted to get out of the company in the near term and the long term. So I think by listening and trying to build that rapport, we were able to have success. And, all 3 of my team members that are still with the company, still in my department, so that's a positive, and we continue to have success together.
And from that, and you just touched on it there, that sort of different drivers and different subject matter, if that's the right word to put it, because very much with your role, you've got this element of investment management, of governance, and we're recording this when, at the height of the COVID crisis and everything else, but we'll talk about that later on in the show. This is more to sort of touch on how your role as a treasurer is structured versus, maybe a treasurer of a Coke or Pepsi or something like that. Obviously, you've got this real estate, you've got investment management, lots of different pressures there, which are different to some other treasurers. Perhaps describe, if you would, your role as a treasurer there.
Yeah, so our role began early on as just making sure that very consistent with core treasury, right? Core treasury applications, trying to make sure that we had our cash forecasting, that we were investing our cash in the right manner, that we were raising debt project level to corporate level efficiently and effectively, building our bank relationships. So, all of the core treasury functions. And that the first 3 to 4 years was really focused on building that and leveraging the team strength. We had very good cash management team that really understands cash management, that is heavily, involved in technology, has been working Treasury workstations since the mid-90s. So, you might have appeared like we were, we're not a big company, we're not the Pepsis, but we had this, we've been in a workstation since, for a team of 4 and yet have a Treasury workstation since the mid-90s. That's impressive, and we have a great bench in that regard. And so it was an opportunity to just, fine-tune that and let the organization know how, effective we were at cash management and get the message up to the organization. And in some areas, like bank relationships, there was an opportunity to broaden our bank relationships and strengthen them and do more deals and do new deals and support the growth of the organization through project financing and leveraging our assistant treasurer, who's now our assistant treasurer, his experience in that area and his depth of knowledge around how to raise debt. And so it was really just tapping into these resources and giving them an opportunity to identify the projects they needed to work on and then communicate them up to senior management to give the senior management team confidence that we had the potential and the capabilities to help the company grow. But over time, that was kind of the phase 1. But over time, once we got there, I was really interested in pushing out into what treasury can and risk management can be. And that's why I think now I have the chief risk officer title for the last 3 or 4 years, because what I was doing in that, the second phase of my time at Rockefeller Group was really broadening our role into corporate finance, broadening the treasury team into investment analysis. So now I sit in on a committee, and I have for some time. We've created a committee called the Steering and Capital Planning Function. And that is a group that evaluates investments as they come through the pipeline, as they have their preliminary approval, their final approval, all the interim steps in between. And we work with the development teams. Our business is really all about identifying development projects. A big piece of our business, I should say, is all about identifying development projects and choosing to invest in them and then executing those investments. And so I've been able to position my team and myself so that we are playing an integral role in evaluating those, in not just the cash management or debt raising of those projects, but also in the evaluation of those investments and helping guide the organization in its decision-making process and governance around that.
And you talked about the sort of the quantitative analysis demands that places you on there. But then, and again, you very much impressed upon me that it's not, your job isn't about analysis, not just, oh, here you go, guys, here's some of the figures, here's a big thing. It was actually then about getting closer towards a treasury, getting closer to giving greater value to the business itself. And again, people are saying, well, how do you do that? I've done my analysis, and I'm giving my information to the CFO, or how do you actually instigate that process? Or, how have you made it work?
Yeah, I kind of describe that as the third phase, whereas, phase two is more of a corporate overhead and continue to play that corporate governance role. What I'm trying to now accomplish in phase three is to really be as embedded in our project teams as possible. So, that we are a trusted, valuable resource for our development officers, that they are reaching out to us proactively, that they see us as an integral part of the process, whether it be because, they're concerned that they might not be able to raise debt in an adverse capital market, or whether they want us to kind of be a second opinion on, evaluating the risk metrics of the deal and identifying the top risks that are inherent in the transaction and how to effectively mitigate them. But we are now looking more and more to embed ourselves in that organization and do so. There's a balance there. It's hard because, as a corporate office, you're often seen as the part of the decision-making process, part of the no-go process. And yet we are that. We are still that. But at the same time, we have to try to say, well, we want to support you and put up the best decision as well. So there's initial resistance because, the entrepreneurial side of the business really wants to, control the process, and they want to make sure the process gets approved. This is their livelihood, and this is how they drive the value to the company, and you have to be sensitive to that. But at the same time, if you're not, the organization needs to understand that early identification of risks and early mitigation of them will help a deal prosper. And an example that I can give would be in our industrial development business in New Jersey. We are building warehouses in New Jersey. We've been doing it for some time. We have tremendous success doing it. And, a lot of the land in New Jersey has environmental issues. And if you go back earlier in the 2010s in our company's history, we were reluctant to develop on land that had an identified environmental issues because of the headline risk and the practical risks as well. And over time, we were able to work within our team to identify insurance that could be obtained, environmental insurance that could be obtained, that contain the risks, and then through thorough evaluation of the environmental concerns and how they were, what the true risks were, and understanding of those risks, and then directly defeasing them with insurance, we were now able to develop sites that other, developers might not have been adept enough to develop. And so this is an opportunity for us to buy land and make money and build buildings where others cannot. And I think that, we played an integral part in that.
And we said before the show today, I had a podcast earlier this week, and we're not just going to constantly focus on this situation, COVID and 19 and everything else. But we want to bring it up because when I was talking to this chap earlier, he's in Brooklyn, Didier, he'll come out on the show shortly. One of the things we were talking about is the initial dealing with it and recognizing it for what it is, sort of that first initial assessment of what the problem is. We talked about how, there was 9/11, which was terrorist. Boom, that was it. Global financial crisis was this thing that didn't have a start and end date. At least with the situation we face now, it's still something that's happening and it will pass. And it's about planning and getting through it and, planning for the future and everything else. But then, a lot of treasurers like yourself are, coming to the forefront, with corporate liquidity and lots of other things. Describe how you've been, when was the knock at the door, or when did it say, right, Sam, we need your help. You're going to be front and center of this. How did it sort of come about, if you like?
Well, what's interesting is with my Treasury and Risk Officer role, I had kind of a mandate right from the beginning to take a look at this. And, early on, we were working with our HR team and our legal department to see if we should put a travel advisory out to our organization. Early on, we had asked them if they wanted to do that. So I think that was pretty early in the process. So we were engaged from the get-go. The challenge has become, from a risk management perspective, how to be proactive, how to be forward-looking, and to stay ahead of the wave of information that's coming. You get something out to the organization a day or two before it becomes more common knowledge. I'm not sure if that's actionable, but in some cases it has been. It's just that the information's moving so quickly that it's been a real challenge to stay in front of it. But I think we've been, whether it's the Treasury role, let me put it another way, in the Treasury role, I think we've been able to, really drive value in a number of areas, whether it's economic analysis, liquidity analysis, evaluating our revenues. Maybe if you'd like, I could jump into a few examples.
Please do. I think it's great because that's what people want to understand, how you deal with it, because they're doing the same. Hang on, what else should I be thinking about? So yeah, please do.
Yeah, I think in the early stages, it was all about trying to evaluate economics. What's the Q2 GDP going to be? Is it going to be negative? Oh, it's going to be negative. Okay, how negative is it going to be? And looking at weekly jobless claims and evaluating all those metrics to try to indicate how deep a recession was going to be. That's kind of become now forefront of everyone's mind. And, 2 weeks ago, it was news. Now, news to the organization. Now it's in the forefront of mind. So we've been shifting and working more through, we're continuing to monitor that, of course, but now looking at our liquidity analysis. How much cash should we have on hand? So, the first message out to the organization is we have a very strong balance sheet. Our balance sheet is very strong today. And getting that message out to the organization, reinforcing to the staff that this is a company that has tremendous stability and, that we can meet our near-term obligations, and getting out to our internal employees, getting it out to our external stakeholders. But then working with the banks to kind of confirm that there isn't going to be a run on the banks, that there isn't going to be any liquidity issues, and just working directly with them. And then looking more internally and making sure that, we're going to be able to maintain our revenue. For the Rockefeller Group, revenue primarily comes from two large office buildings that we own, 1221 Avenue of the Americas and 1271 Avenue of the Americas, and having our tenants pay rent. And so, we went through and our team conducted a tenant credit analysis where we reviewed all of the financial information that we could obtain on our public companies that are our tenants and our private companies, and provided a risk assessment that we sent up to the CFO and the CEO, and where we, highlighted one or two prospective tenants that might be at risk. But overall, basically the message was that, our tenant pool is very strong, and we're not expecting issues. But then, and continuing then saying, keep pushing forward and saying, okay, from a lender perspective, we have construction financing we'd like to obtain in the next 2 months, 3 months, 4 months. So for each project, kind of trying to evaluate where the financial institutions are, if are, on a case-by-case basis and overall holistically, are the banks open for business? Are they going to be able to provide us construction financing at this time? Because that's, an integral part of our company and the role we play in Treasury. But also then taking a broader look, shifting a little bit to the risk management perspective. We have our top 30 risks, top 20 risks that we look at all the time, and we focused on 10 to 15 risks that we think are very important in this environment, that we should be, making sure that our risk owners are evaluating, that our key company executives are monitoring and looking to mitigate directly. So we've got that message out to them and are in kind of standby if they need assistance in further, mitigating those risks. And also just, fraud management. Everybody in Treasury is focused on fraud management today, I think, and especially in this environment when there's, so much instability and there's a change in our routines where we're all working from home. We feel that this unfortunately creates a potential opportunity for fraudsters to take advantage of our new processes and our distance in our communications. So, we're getting a message out next week, no later than next week, that just reminds everybody about our best practices in terms of payment processing.
Yeah, it makes everybody aware and just take that pause, if you like, before they do things. And that actually brings us very nicely, without it being planned, actually, sort of segues into where do you see the future of Treasury? Because Treasury I've talked to this so many times, probably just to show that CFOs, I find now, when I'm talking to them, they say, I use my treasurer as the sort of the scout. They're off out in front. I'm pushing them out in front. Some of the times, not sacrificially, but, they have to do, you do a lot of work. But what I mean by that is they say, right, could you assess this blockchain idea? Could you assess this for me? Could you do this for me? On top of your day jobs, which I think sometimes is a challenge. But what are you seeing coming at you that, number one, that you think, no, we're not going to bother with that. We're going to sort of divert that off to that's suited for other businesses. Or that's an exciting opportunity. Or these things treasurers should be thinking about. Obviously you've got cyber and risk and everything else. But what are your things you're thinking about for the future?
Yeah, I think that it's all about risk management and being able to be a leader in that area and harnessing your company's, your organization's resources to manage risk and to directly defease it wherever possible and to understand and fully understand the risks that you are taking and how those risks can impact that. I think that the issues of COVID-19 right now present a challenge for everyone, but to me, it feels very close to home for treasurers, because treasurers need to be, as I just described, evaluating the capital markets, making sure that they have access to the capital markets, making sure that they have liquidity to run the organization. Businesses will, succeed or fail based on whether they have sufficient liquidity, whether their capital structures are strong enough, whether they understand their cash forecast, and whether they have the insurance in place to protect them as appropriate. And so for me, treasury and risk management go hand in hand, and an organization has to be not just about the revenue side and not just about growth and profits, but it has to be about risk tolerance and risk avoidance as well. And that to me is the other side of the page. To me, the two go hand in hand in terms of their strategic importance, and the treasurers across the globe have this experience. And I think that the opportunity for Treasury is to, continue to manage their core functions and to do it well, but to use that knowledge and those capabilities to communicate to the company's senior management team and to be an integral part in, navigating the company's strategy, especially in times of distress.
Sam, that's amazing stuff about talking about the company and the way that treasury and risk fits in this, turbulent world, so we call it. Just as we wind up, come to the end of today's show, tell the listeners, people will look at, again, my usual closing lines of the show, and this is what we're going to come to. We'll put your LinkedIn profile in the show notes. People can connect to you if you think it's right for you and everything else. Sam, as you go through there, what are the key tips from you that if someone wants to be, have a similar career to you, what are the tips you would give to people, and what are the things that sort of, are emblazoned on your treasury sleeve, as it were?
I think that more strategic advice that I would give is to just continue to push yourself to do more, to perform at a higher level, and to champion the treasury team. I'm just a big believer, and maybe even to my detriment at times, but I'm a big believer in how integral the treasury role can be within an organization.
Right.
And I am just very proud of the work that my peers do. And I think that for me, I would just applaud people and encourage them to reach out to me as needed, but find opportunities to take a larger role in their organization. And I know how challenging that can be, because you have to keep an eye on the day job. You have to focus on those core capabilities of treasury that we've talked about here. But, hopefully I've given some examples of where you can take that knowledge and leverage it and communicate it in an effective manner so that it becomes something that will get more appreciation and play a larger role in the value of the company. So that's, I think, the biggest takeaway for me today.
Amazing. Sam, it's been amazing, sir, with a few hiccups along the way from my side, but I think Sam was bloody good at this, isn't it? Well, we're coming on to 100 episodes. I'm going to say it's one of my favourites. I think we had a really good laugh before we did the show and the pre-call. Great treasury background with Rockefeller. I think you've got some really good, interesting takeaways for people today. We finished on time. I loved it. And this is a great show. So those listeners, feel free to connect to Sam. Any comments you've got about it, or you've got further questions, send them across Sam's way or my way, and look forward to next 100 shows. And thank you for being a guest, sir. You've been an absolute star.
So welcome back to the Treasury Career Corner podcast. You get to see some video as well. Well, here you go. We've got I know I've got a face for radio, but Sam hasn't. So Sam's looking very good. I'm welcoming back today Sam Pallotta. Now, Sam and I last spoke on the show back in 2020. As you've just heard the previous podcast when Sam was at Rockefeller Group. But Sam is now the CFO at Russo Development. You've got that right. Russo Development, one of the most active privately held developers of industrial, data center, and multifamily properties serving the New Jersey market. But as always, I will get Sam to explain about that, about his current company. But we're going to transition back. We're going to go from when Sam was there. We've seen each other a few times, but last time we spoke was April 2020. Lots has happened. Sam, I'm going to hand the microphone over to you, sir. What have you been up to since we last spoke? Over to you.
Yeah, so Mike, it's always great to chat with you and to see you recently. And, after navigating my old company, Rockefeller Group, through 2020 and 2021, and after we talked and navigating the post-pandemic era, I decided that it was an opportunity for me to kind of go out and seek new employment, to really, I've always aspired, one of my career goals has always been to be a chief financial officer. And while I was at Rockefeller Group, I was, the chief risk officer and treasurer there, really enjoyed my 14 years with that organization, such an excellent organization. But I felt like my future lay elsewhere. And so, the CFO at Rockefeller was doing an excellent job. So I said, okay, let me move on to Russo Development. So I found work here at Russo. You did an excellent job. Russo is a privately owned company, very active in New Jersey, real estate development and property management. I'm very excited to be here. I really enjoy the fact that the company has, a very robust development and construction arm that we do construction in-house. We have an in-house architect and engineering team. And then we have our own in-house property management team. So we really are able to take projects from, cradle to, to a fully operational property and then continue to manage that property. And so it's a great platform. I'm really happy to be here. And I get an opportunity to, be a chief financial officer and really broaden the scope of, financial activities that I'm responsible for. So it's been a year and a half since I've been here, and I'm really enjoying my time here. It's an excellent team and having just a great time.
And when we did a pre-podcast call the other day, and we talked about maybe some of the things that set you up for success in the CFO role from Treasury into now the CFO position, there were some definite things that were there you already had in your back pocket. There are also things that perhaps you didn't have quite so much and you've learned and grown into. What were the key things? Again, this is an advice show, if you like. So people have heard the previous podcast. They've heard your career to that stage. Bring us up to what was it like making the transition?
Yeah, so the transition was very interesting. Even during the interview process and as I was evaluating job opportunities, it became very clear that I would have strengths and weaknesses as a chief financial officer. The strengths were going to be that I had a lot of experience in risk management, experience, of course, in treasury. As a treasurer, my treasury experience was going to be the strength I would lead with. But to be a CFO, you have to be a lot more than that. And I had great experience in risk management and investment analysis. And so I can talk a little bit more about how the investment analysis and strategic work I did at Rockefeller, I think really positioned me well for a CFO position. Also, we should talk a little bit about the fact that, one of the areas of improvement I needed is in the accounting space. And at Rockefeller Group, my role was clearly defined. And while I worked closely with the controller and got involved with accounting work, that was clearly something that I was going to need to focus on more here, because that's such a big part of the job at Russo, which is to oversee the accounting department, to enhance our processes, and to, work on our financial reporting each month. So that's something that was something that was not the full focus of my job at Rockefeller Group. And so something that I was going to need to, kind of reorientate myself to.
So if someone they're a treasurer now and they've got a similar appetite, they want to be a CFO, and you're now 18 months into it and you're reflecting back, what advice are you going to give those guys? They're sitting there in that treasurer chair going, I want to do what Sam's done. I want to get to that CFO position where they are now. Should you saying to them, go and sit with your financial controller, or go and partner with those guys? Because I know that a big thing you already had was the investment analysis. You touched on that there. You've got that. You had that. Can you explain that to us? And then what advice you think people should, what they should be aiming for?
Yeah, I think that, when we were talking in our pre-call, the first thing that came to me was the work that I did with our controller, Rockefeller, and some of the projects, we worked on together. And I wish we had done more projects together. And, we had put in, at Rockefeller, there was a project to put in a new ERP and accounting system. And I had gotten involved in that to some extent, but I was like wishing I had gotten more involved, because that would be great experience to have as I'm now putting in a new ERP here at Russo. We're looking to launch that project in 2024. So to have been more closely involved in that project, Rockefeller would have been great. And I'm glad that I was involved. Being more involved in the controller, taking on control projects with the controller, partnering with him and his staff. That's the advice that is the most, I think, straightforward. But then really when I thought about it and you helped me prompt me to think, I think what really, again, was helped me to, rise to a CFO was the other things that I was doing, right? Which was getting involved. After the first few years at Rockefeller, I was very involved in the strategic analysis and the financial analysis the company was doing. Specifically what I can talk about was working very closely as part of the investment committee for the company in helping the company to evaluate their financial transactions. And so whether it was changing how the investment committee worked or expanding and broadening the investment analysis and the investment materials that went into the investment committee, or, at certain points I was on the committee, voting on the committee, or I was the secretary and helping drive all the decisions, interacting with, in real estate, the investment committee process is really discrete to one real estate project, and you're working very closely with the development office that's running that project in that location. So I was working very closely with them to help shape their financial analysis, make sure that they were achieving financial benchmarks, and working through structuring deals on occasion to make sure the deals were structured efficiently so that they would provide optimal returns, maybe delaying cash investments, for example. And so as you're working through that entire process, whether it's working through and helping to structure the deal in the beginning of its life cycle, or right when it's ready to come to the investment committee, or sitting in on the investment committee. I was fortunate enough at Rockefeller to sit in on every investment committee meeting that they had for the entire 14 years I was there.
Yeah.
So every investment they made, I was at the table and got to ask questions, participate, and help prepare the materials. And so when you have that experience, that strategic investment analysis that you can then apply as a CFO. And so it's a very natural transition. And I think there is a role for treasurers in any organization to be involved in their investment committee. It can start with what you're an expert in. It can start with being involved in the cash, the debt, the cash financing, the cash management, the debt financing, the insurance, but it can naturally transition into the financial analysis and the strategic evaluations as well.
And you made the step into the CFO chair now. You're in the hot seat, which is fantastic. You talked about some of the strengths. What were the other things? You and I talked before about maybe working more with the controller and things. Other things you think that treasurers should think about?
Yeah, I think if you're a treasurer and you want to be moving into the CFO role, getting experience in debt management and working on transactions to raise debt is always important, because then that is a big piece of a CFO's job can often be to manage capital market transactions. So getting involved in debt and interest rate hedging and management and all of that, you can be the expert for that. And that's, a role that a CFO needs to bring to most corporations. So I think that's definitely one piece of advice that I would recommend. I think another is liquidity management. So, certainly it's paramount here in real estate, but I think liquidity management is very important. Whether you're leveraging what I was just saying about debt and, how robust are the capital markets, how active are lenders today, how available is funding for your corporation. But, on top of that, liquidity management, making sure that your company has cash flow that is going to be sufficient for not just the best case scenario or the likely scenario, but the worst case scenario.
Yeah.
And in that worst case scenario, how is your company going to fund itself? Do you have ample lines of credit? Do you have an ample revolver? Do you have collateral that can be, leveraged in any capital market situation or in most capital market situations? Helping your CEO to prepare for that downturn scenario, for that unexpected volatility in the capital marketplace, for that extreme black swan event, pandemic, et cetera. I hesitate to say it, but whatever it might be, having that experience, that as a treasurer, you are responsible for cash management, liquidity management, and risk management. And so when you bring all these together, if you can emphasize liquidity management and risk management, then you can really start to take on a broader role, be seen as a leader, and then the natural transition, in my mind, it's a more natural transition into that CFO chair.
Now, do you know you were on the show before and you've listened back? And so normally we do the career journey, which we've done with yourself. We then ask, some of the future issues with treasury and finance. We've just touched on that now. I know there's lots of, we're gonna keep this shorter because people have already heard a lot about you and your ethos. But I know you've got some great advice for people and you want to go through that checklist, if you like. So we'll put your LinkedIn details in the show notes so people can connect to you, which would be fantastic to have them in the connection. But let's go through, some of because as you said, they're like observations, and there's some of the things that, again, listeners today and actually viewers as well, that they should be writing down. What's the sort of things that they should be thinking about, do you think?
Yeah, I think that the first thing that I would suggest is trying to have that breadth in your career. If you want to, regardless of whether you want to be a treasurer or a CFO, whatever your aspirations are, I think being able to take on more in your position. So let's start when it comes to treasury, cash management, liquidity management. Those are our bread and butter, right? But can you then expand out to there? And as I was saying before, I think the next transition out is into debt management and then into risk management. Sure, you're going to probably be involved as a treasurer in insurance procurement, but can you broaden that? And can you start to get in, and you're going to probably be involved in fraud management and fraud prevention, but can you broaden like some of those more traditional treasury roles in risk management? Can you broaden that and create a risk awareness, identification, and prevention program that spans your entire organization? This is, for the audience here, that's a natural strength of treasury people, is to be cognizant of risk. You're constantly worried about fraud. You're worried about you're involved in insurance procurement. So why can't you take that strength and broaden that out? Just like if you're doing cash management and liquidity management, it's a natural broadening to be the source of debt management and to run debt deals. So I would say you start with the basics and then you expand it out. And then that holy grail is to kind of get into corporate finance, is to continue to move yourself more and more into corporate finance. Treasury people have the expertise. We know how to put together financial analysis. We know how to do discounted cash flow statements. And we are oftentimes, in most organizations, one of those subject matter experts. So it's a natural transition for us to get involved in that analysis and to be a voice in the room for strategic decisions. Maybe it starts with answering questions about structuring the transaction so liquidity is maximized. Or maybe it talks about you're just coming in and saying, okay, we do have the liquidity for this deal, or you're opining on how we would raise the debt or what the rate of interest would be on the loan. But over time, can you expand that and get into that role and do more in the finance space so that, as I already discussed, I won't repeat myself, but as I already discussed about broadening it into the investment analysis. Yeah. And then when you're doing all that, can you then, on top of the final thing is, can you stay well-versed in other areas that might be outside of your daily job? Can you stay well-versed in accounting? Can you stay well-versed in transaction services and payment processing if that's not an area of your strength? Some treasurers already have that in their area of responsibility, some don't. But if you don't, how can you get involved in working capital management, payment processing, receivables collection? And then if you're doing all of that, that to me is the job description of a CFO in most organizations. I think that covers most of what a CFO does. And you could see where your core is in treasurer and then how you expand your broad and your scope.
Amazing. Any other final bits on your checklist, or are we all done? Because I know that we spoke before and there was things you didn't want to miss. All done?
No, I think we're good. I think it's best to keep it short. I mean, I think having having 2 podcasts might be already a stretch for me. So
You've done brilliant on both.
I think we've gone plenty. I think we've gone plenty long here, but I'm really happy to have this conversation.
Amazing to catch up. Thank you, Sam, for your time. It's been amazing to speak.
Thanks, Mike.
Hello, Treasury professionals. Before you dive into the next episode, could you please help me continue to grow the world's only global Treasury salary survey? That's right, our one. So you know your compensation is constantly benchmarked against the market. It's amazing, isn't it? Just go to treasurysalary.com. It takes less than 2 minutes to complete, start to finish. You then gain exclusive, regular, updated access to our salary survey, keeping you ahead of the curve. The survey is an evolving, breathing entity that constantly tracks the salaries of Treasury professionals on a global basis. Currently, we have over 1,100 participants taking part at treasurysalary.com. Thank you for being such amazing loyal listeners. Your support is incredible. Couldn't do it without you. Thank you. Go to treasurysalary.com.